Good day. 10/10, 2012. Dow Jones Industrial Average. We've had a nice correction, as we said we would have up here at the highs. I'll draw, and this is where the highs were, right here. Now, what I will introduce to my new MMTs is that the high of this Dow was at 13,647. Today's low on the Dow for this week is 1335 on the Dow at the 10-week moving average. So the peak was at 13,647 on 9/16, and this is a weekly high. From that weekly high to this weekly low of 13,647 MMT, down here to today's low on the Dow of 13,335.49. And I will tell everyone that every bull rally has to have this kind of a pullback, and we're in the earnings season. The Fed Beige book came out, so you want to take a look at that Fed Beige book data that will go with this Dow chart, because I can tell you right now, when you take a look at the top of this bar, it's a weekly bar, that if we sell down to the 10-week moving average, is that this lower level right here is going to be your 20-week moving average, which would also be at about, let's say right around 13,056. Now, the key is when we're measuring the Dow, and Caterpillar is down today, Cisco is down today as far as your 30 Dow components. That's this right here, and there are 30 Dow components in there, Caterpillar being the big one that's a big drag on it today. So you know where those Dow points out of the 30 is between Cisco. Caterpillar was down about 2.4%. Cisco was down about 2.2%, but that weighs on here. But nonetheless, we're identifying the resistance levels and the correction levels and the 10-week moving average level. And when we break it and sell down through it, hey, this is that lower support level right here, which is going to be half of this weekly bar within this correction that we're going to have. And you can see where this weekly distribution, as we've started the major earnings season, there's going to be a lot of companies that have to guide down, like Caterpillar, Cummins did last night. There are lots of them that are going to have to drop their growth forecast, and then there are going to be some who do okay. And, depending on the sectors and whatnot, I can just give you an idea today. As far as the energy, XLE was down 1.7%, materials, XLB down 1.0%, healthcare, XLV down 0.9%, industrials, XLI down 0.7%, consumer discretion, which is the XLY, down 0.3%, and technology, XLK, is only minus 0.3%. For the day, telecom down 0.1%, consumer staples down 0.01%, and financials are flat at 0.0%. That's the XLF. And consumer staples, the XLP. Now, knowing that those are all down, that's part of outside of those other major bellwethers of the 30 stocks in the Dow here, is that the Dow Industrials are going to have a problem. And I will be happy to show you the Dow Industrials component right here. DJT is Dow Jones Transportation, or Dow Jones, but let me show you here. Here's the one you're going to want, the DJI. But nonetheless, you can see across the board here, Cisco is down, Caterpillar is down in this Dow 30. Okay, and it's 30 stocks. Walmart's in here holding it up, but nonetheless, these are the 30 stocks that are in this Dow. Okay. So we have that clear. And we have a correction. And we have that clear. And as we said, we were at 5-year highs the other day. And 5-year highs up at resistance need to sell down. This would be the ultimate test. Sell through the 10-week. But the 10-week moving average, when you sell through it, then you can come all the way down here to this support line and then test that 20-week. That is a major Dow update. The Fed Beige book We were down intraday here on the Dow at one point, was like down 132 handles, and then it popped on that Fed Beige book that the Federal Reserve released. And that report, you can get a good idea here what the, you know, looking at your indexes as what that Beige book said. And once again, we're happy to let you know that bulls have to have corrections. And people are very bearish on the earnings. They never have been before. That means that the 2009 calendar earnings in some of these Dow components, like the Caterpillars, are going to be a drag and could make a good, healthy pullback or correction as we go through these processes with these earnings. That's the Dow Jones component with the Fed Beige book.